Good afternoon, everybody, and welcome to today's webinar from CFA Society Minnesota. We're going to dig into video gaming and esports today. Fascinating topic, and I know that our presenter from VanEck, JP, has talked about this with a couple of other CFA societies. Last week, he visited Seattle virtually. So looking forward to digging into this particular asset class and what it means. So I am Mark Salter. I'm the executive director for CFA Society Minnesota. I'm going to get out of the way in just a second. Before I do, I'm going to thank all of our annual sponsors, the firms you see on the screen here, everybody from RBC all the way through Greenspring Associates. We can't do what we do without their support, both financial and in thought leadership. So we really appreciate everything they do for us. And we also want to do a shout out to CFA Institute. When the pandemic hit earlier this screen, they generously provided a Zoom meetings license to societies like ours at no charge so that we could continue to do good professional learning events like this and do them virtually. So I'm going to stop sharing my screen in a moment. Let our colleagues from VanEck share theirs instead. The only thing I want to do is to mention housekeeping. We're going to use the chat feature for Q&A today. So whenever you're ready to pose a question to JP, just place it in chat and yeah, just give him a hard time. I think he can take it. So here we go. Stop sharing my screen. Nancy, go ahead and share yours.
Great. Can everyone see that okay?
It is right
Perfect.
there. Thank you.
Wonderful. So just a very quick intro to JP. So JP and I, as well as some of our fellow VanEck colleagues that are on the line, are fellow charter holders. So it's a privilege to us to be able to talk to your society and to be in this virtual lunch and learn session. When JP and I first started doing client meetings together 2 summers ago, we may have seemed like early adopters onto this secular trend, but the pandemic, as you'll see from his comments, have really accelerated the adoption of esports and video gaming. And we're getting coverage in media outlets such as Barron's and other more mainstream publications. So we hope that this is timely for you. I like to joke that JP is the only CFA charter holder I know whose day job involves playing video games. So you can give him a hard time about that. Also, given the holiday season, we've carved out 2 to 3 minutes of his time to answer any hardware questions if folks are still looking at gifts for the holiday season. So with that, I'm going to turn it over to John Patrick Lee, who is an ETF product manager at VanEck, and specifically for the esports and video gaming ETF.
Thanks a lot, Nancy, and thank you for having me on, everybody. It's a pleasure to be here. I love the CFA Society, and it's very exciting to be able to talk to a bunch of CFAs and talk about this exciting industry. So Nancy, if you want to jump to page, I want to say 4, just the key points page. Yeah, that's it right now. Yeah, that one. Okay, so video gaming and esports has gotten a lot of attention this year. 2020 has been the year of work from home stocks. Video games are definitely I would definitely categorize video games as in being in this work from home bucket, because this year you couldn't go to movies, you couldn't go to dinner, you couldn't do anything. So people were at home, and as the revenues showed this year, as engagement levels showed this year, video games went through the roof. Okay, so everybody went to video games this year. And I think one of the main things I want to kind of emphasize is that this didn't just happen this year. So there are long-term structural trends in place. Video gaming and esports represents a structural growth industry supported by other long-term trends affecting media and entertainment. So this is a long-term persistent trend that didn't start this year. So today we are going to go over the investment case for the industry. And we're going to talk about VanEck's approach to investing in video gaming and esports. Finally, a little bit about think about implementing the strategy in a client portfolio, how you can talk to your clients about ideas like this. It's a great succession conversation to have with clients and prospective clients. So it's just a really exciting industry. I'm very lucky to be here, very happy to be here talking about this with you today. And then one other thing I'll say before we really get going is that as we go through this, please type questions in the chat. I don't like talking for 35 minutes nonstop. So if you have something that you want to ask as I go through this, just chime in, and I might not answer it right then, but I'll have it on my radar and we'll get to it. So please be interactive. Please ask questions. And again, thank you for your time. All right, let's roll, Nancy. Next slide. Okay. What do I mean when I say structural long-term growth? Okay. So let's think about the top line numbers for the video gaming industry. $160 billion was projections from earlier this year. That revenue number has been revised upwards for 2020. We're looking at $175 billion in global video game industry revenues. And first of all, it's growing at about 8% a year over the last couple of years. But I think the real thing to come away with why is that revenue so big is because so many people are playing. Okay. By 2023, 3 billion people around the world are expected to be playing video games. It's just under half of the whole entire population of the world. So just that, I think, top line number and those top line revenue numbers and user base numbers are a great starting point. Okay, so $175 billion a year. That's bigger than the cybersecurity industry. That's bigger than the AI industry and robotics industry. So this is a massive industry, and it's gotten a lot of attention this year because it's kind of like been this cultural watershed moment. But it was like that in 2019. Okay, so video games had a great year in 2019 before COVID even started. In 2019, S&P was up 30%, and this group of companies, as reflected in the ESPO ETF, the VanEck Video Gaming and Esports ETF, ticker ESPO, that ETF was up over 40%. So, S&P's up 30, we're up 40. S&P had a rocky year this year, and I think we're up over 70% so far this year. So when I think about video game stocks, this is a growth segment. So these stocks and their valuations are being driven on growth expectations and expectations for continued growth in the future. And one thing to kind of keep in mind is that this is a global user base. This is not just the United States. This is not just China or South Korea or Japan. This is everywhere. This is the entire world is playing video games. And that's how you kind of roll up to that $3 billion number. When you start thinking about how many people play video games on their mobile phone in India, how many people play video games on their mobile phone in Indonesia, right? So there's billions of people playing video games right now around the world. And the video game companies are making a lot of money. Next slide, Nancy. So when you think about long-term persistent trends, video gaming kind of sits right in the middle of these big trends that are not just affecting video games. So when you think about consumer demand, okay, so consumers, as technology has improved over the last 10 or 15 years, and as the software applications have kind of come along too, consumers want to be entertaining themselves in an interactive way through their digital products. And I think one of the easiest ways to kind of visualize that is social media. People want to be posting pictures on Instagram. They want to be commenting. I want to be commenting on Nancy's pictures on Instagram, and Nancy's going to be commenting on mine, and I'm going to be commenting on Mike Gandy's pictures on Instagram. So there's this whole world that's kind of existing in the digital space, and people are interacting with each other and entertaining themselves. So that's a huge consumer demand story that's really sprung up in the last 10 or 15 years or so. That's step one. And in a lot of ways, video games are becoming social media platforms because you're playing online, you're playing a game, but you're also hanging out. There's a guy on the call, Chris Gagne, who works at VanEck. We play a Call of Duty a couple times a week together. It's at night. We're having fun playing, hanging out, chatting, and just living our lives. And we're doing that in lieu of watching TV, right? And that brings me to step two, is that the fragmentation of the digital media landscape has accelerated over the last few years. And when I say that, I mean cord cutting. So there are more options for people out there than there used to be 15, 20 years ago. And the chart on the left, you'll see Goldman Sachs estimates of how many people are cutting the cord, and it's accelerating, okay? And just in the last week, Warner Brothers announced that when the new movies that they release next year year, including the new Dune movie, for example. They're not just going to release that in the theater. You know, historically it's been like, we're going to release a movie in the theater and then it's going to play in the theater for 2 months. And then, you know, 6 months later, it's going to be a blockbuster, right? Now, next year, all the Warner Brothers movies that come out are going to come out in the theater, and they're going to come out on their streaming HBO Max on the same day, right? So that is what I mean by this trend of cord cutting. So in a lot of ways, video games represent another opportunity, another choice for consumers. And you see that reflected in some of the leading cord cutting companies like Netflix. Okay, so Netflix, I want to say Q1 2019 Q1 2019 report, they said, you know, Netflix views Fortnite, which is a video game, as a bigger competitor for eyeballs than they view HBO Max. Okay, so when Netflix is looking at Fortnite, a video game, as a bigger competitor than another digital streaming service, that is what I'm talking about when I say fragmentation of the digital landscape. Finally, demographics. So demographics are huge, and I want to clear up a kind of a misconception right off the bat, is that the average video gamer is not a 12-year-old in their parents' basement spending their parents' money. Okay, there are games like that which cater to that audience, but your average video gamer, as myself and my colleague Chris Gagne can attest to, 30-something-year-old person with above average income. I have a job, I go to work, and I'm spending my money on video games. And it's not just me, right? I'm not an outsider. I'm not an exception to the rule. I am the rule. Okay. So when I think about demographics, just think to yourself, 40 and under. Okay. So the people who are 40 and under around the world are more prone to also kind of lean into those first two ideas. So 40 and unders are using interactive digital entertainment at a higher rate, and 40 and unders have cut the cord, right? I'm 37. I've never paid for a cable subscription package since I left my parents' house when I was 18. Okay. So that kind of trend, that kind of theme, I'm the perfect embodiment of this idea. And it's all circling around video games, right? So they're really benefiting from all these other trends that have kind of created this perfect storm for the explosion and adoption that we see played out this year. And so when you think about 2020, think about spike in the spike in engagement, the spike in users, spike in revenues. Yeah, I see that as an acceleration of these trends that have been in place for years, not as a one-off spike that's just going to go away. So when COVID goes away, sure, things are going to cool off for the video game sector, but these long-term trends are going nowhere. And I think when you think about demographics, in a lot of ways, demographics is one of the most important parts of that, because you think about a 10-year-old today, you know, he's the Jimmy Neutron or whatever, 10-year-old, he's playing all day on his parents' iPads. And when he's 15, he's going to be playing video games. And when he's 20, he's going to be playing video games. And when he's 35, he's going to be playing video games. And when he has kids, when he's 35, whatever, when he has kids, his kids are going to be playing video games, because it's a part of our culture now, in ways that comic books have become, in ways that, you know, television characters and other forms of entertainment have gone from being this thing that nobody thought about was real, or was that, like, you know, back in the 50s, comic books were seen as this horrible thing by parents. So like, you stop reading comic books and go outside and play, you know, whatever. Now comic books are a part of our lives. You know, you see that reflected in the Marvel movies and stuff like that. So I was just asked the question. This is a good question. Thank you, Cam. So it says, does this include video gaming streaming services, or is that separated out? So video game streaming services are a huge part of the story. So a streaming service is like Twitch or Google Games, or Facebook has a gaming, and then there's also streaming services in China and South Korea and stuff like that. So the chart on the right shows the adoption of Twitch as a platform over the last 7 or 8 years, and you see that spike in growth in 2019. That's 2020. That spike has gotten higher since I made this chart, like over the summer. Average concurrent viewers on Twitch. How many people are using a website like Twitch? So as a general rule, when I'm talking about the video gaming industry, streaming services are definitely a part of the video gaming ecosystem. I would consider that kind of like a secondary company or secondary platform. All of those secondary platforms like Twitch, like YouTube, like Discord, similar spike in engagement, similar adoption rate among huge swaths of the population. One more question that just came to me. Interesting note on demographics for the adult crowd. What does the split between male and female look like? So that is a little point of contention. The video game publishers themselves and the video game industry will want you to say, oh, it's a 50-50 split. Men and women are playing video games at the same rate. I wouldn't say it's 50-50. I think it's more like 65-35 or 60-40 tilted towards males. And Twitch is one of the few websites that I've seen, the few platforms that have kind of said, yeah, everybody's saying it's 50-50, but it is skewed a little bit towards males. But I think that in the last few years, there's been a concerted effort to bring in female gamers and to make gaming more palatable to women. And you see that in games like Animal Crossing, which has been a huge hit this year, very popular with women. And so I would say going forward, we're going to see more active. This is going to be more active efforts to bring more women into the video gaming and esports ecosystem, whether that's through, games that are targeted towards women and cater to their demands, or just more people are playing, so there's more women involved. So that is, women in gaming has always been kind of a thing, and I think that there's been a good concerted efforts by the industry to bring more women into the field. So that's a good question. Thank you very much. All right, Nancy, next slide. All right, back to gaming. Okay, those revenue numbers we went over at the beginning, those are crazy, right? $175 billion. How do you get to that number? And I think what the key story over the last few years has been mobile. Mobile gaming is huge. And mobile gaming is a really great story because it is a great example of a lot of things that the video game sector is doing right. And so go back to 2005. Okay, there was no mobile gaming. Right, mobile gaming started with the invention of the iPhone. The first commercially viable mobile game was Angry Birds in 2008. So before iPhone, there's no mobile gaming. So in the past 13 years since mobile gaming started, it has grown from zero, and now it is the largest segment of the video game channels and is the fastest growing. So when you think about what are your traditional video game channels, you've got mobile, or traditional was actually PC. So you're playing on your computer with your keyboard and your mouse, you're downloading games, playing on your computer, or console. And console is obviously Nintendo, Xbox, and PlayStation. So those are two historically, and then you go back further, then you start talking about arcade games back in the 70s. That was like the big video game channel back in the 70s and early 80s. So console versus PC, they're the big boys, for years. And then all of a sudden mobile comes around, and now mobile is the biggest, fastest growing segment. How can that be? Okay. Take it back to the global growth story. Take it back to global diversification of users. Mobile gaming is a huge story in the emerging market space. Mobile adoption in emerging markets countries like Brazil, like China, India, Indonesia, and on and on. It's such a young population base, and getting access to mobile technology for the first time. And what do people do when they get their first mobile phone, right? Games play such a huge part of the mobile experience. In a lot of ways, when I got my first mobile phone back, when they came, and I didn't get it right off the bat, but when I got my first mobile phone, I remember the first thing I did was download Angry Birds and Fruit Ninja, because it's a way to teach people how to use your phone. If you've never seen a mobile phone, you're like, what is drag and swipe, blah, blah, blah. So it's like mobile games are very much a part of the mobile story just by default, because you get your mobile phone and it's got games on it. You're trying to figure out how to use your mobile phone and you're playing a game. So it's kind of built into the mobile ecosystem. Furthermore, you think about how much it costs to buy an Xbox, right? The new Xboxes are coming out. They're like $500, right? You already have a mobile phone. There's essentially no cost of entry for somebody to become a new mobile gamer. And you think about a 22-year-old person and that lives in the Philippines or that lives in Indonesia, they're not going to spend $500 on an Xbox or spend $1,000 on a PC so they can play. Everybody's living their lives on the mobile platform, and in a lot of ways, video games have been like this huge success story for these companies, because by and large, these companies are very tied into the tech sector. And when I say that, they're saying, okay, what is technologically possible today to be able to facilitate these games? What can we do, right? And then they're saying, what are we going to be able to do in 5 to 10 years? So they always have this kind of vision towards the future. And mobile is like, okay, they saw that coming, they executed, and it's a success story. So it's not like they're like, okay, mobile, we're good, video game industry, we've innovated all we're going to, that's it, right? No, they're still looking 5, 10 years out. So what's 5, 10 years out from now? Cloud gaming is huge. So cloud gaming in a lot of ways is just the same story you hear about, your cloud technology that, facilitates whatever else. Like, right. It's not, you don't have to buy the Xbox anymore. All you need is a subscription service or Microsoft or whatever cloud platform you have, and you're off and running, right? So they're always looking forward, and they're trying to figure out what's the best way to deliver our product to consumers based on what's technologically possible and what's socially acceptable. So over the next 5 to 10 years, cloud gaming isn't on this chart, but it will be in the next 5 to 10 years as the technology gets better, as 5G rolls out, and as the cloud gaming becomes a viable option. It's not really a viable option right now because the library isn't there. The platforms don't have the robust library, and the speeds are not 100% there. They're getting there, but I think in the next 5 years we'll see mass adoption of cloud gaming, and will become a story just like mobile is now. Okay, so that's where the growth's coming in from one perspective. Next slide, Nancy. And just like these companies are very good at identifying new technology and leaning into it, they're also good at identifying new business models and leaning into it. So I got a good question. As mobile phone adoption growth has reached a relatively flat level, how will this impact the growth of mobile gaming? I think that the easy answer there is there's more young people in the world than there are old people. And as young people grow up, adults, young people are going to be playing, the population of people who have their hands on mobile phones right now, you fast forward, right? The world's population is getting bigger, and the people who are young today are going to be using mobile phones and playing mobile games on their phones into the future. The way I think about it is this: in 10 years, are there going to be more people or less people playing video games? And according to demographic trends and those other trends I was talking about, there's going to be more people playing video games. So mobile, I think we're still in the early stages of mobile as a story. And you see that also reflected in a lot of the investments that these companies are doing. The top publishers like Activision and Tencent and Take-Two and yada yada, those guys are investing still heavily into the mobile space. So it's kind of like follow the money. I follow the people who know what they're talking about, know what they're doing, which is the companies involved, and they're still investing and pushing the mobile story. So I think they're going to keep. I think there's more room to run in the mobile story. Okay, in-game spending. Okay, let's all teleport back to 1992. We all have Sega, Super Nintendo. Super Nintendo just came out. It's very exciting. The new Mario Kart just came out. It's a great game. Everybody's hyped about Mario Kart. So you want to play the new Mario Kart. What does that mean? You drive down to Toys R Us, which is closed too. So this is not happening in a bubble. Remember, you drive down to Toys R Us and you plunk down your $50 and you got your cartridge. You go home, you play Mario Kart. You play it for however long you want. It's a one-time transaction. That is the old business model. So that is called game as a product. It's a single revenue generating fee. The game publisher develops the game. They spend a lot of money marketing the game, and they release it. And then, I buy it, Nancy buys it, Chris buys it. And that's the only time we're going to spend $50 on Mario Kart. Okay. So that's the old model. New model is called game as a service. So their game as a service is completely different for a lot of reasons. I think the biggest and easiest to understand is that the game as service games are a lot of times free or very, very cheap. So you think about a game like Fortnite, which hopefully people have heard about. Fortnite made more money than any video game had ever made in a single year in 2018. Made $2.4 billion in a single year from a single game, Fortnite. That is a free game. Anybody on this call today or back in 2018, if they want to play Fortnite, you go to a Fortnite website or you just log on your Xbox and you download it for free. How are they making money? There are a number of different ways. The first and easiest to understand is the customer is buying digital items within the game without having to go to the store. Remember, we're all playing on our computers. We're all plugged into, my computer's got my credit card information. I know Mike Gandy, his Xbox at home, his kids know his credit card number. All you have to do is click the button and you're spending money. Are you sure you want to spend $10 on this? Boom. And you're buying characters. If you want your guy to look like Spider-Man, if you want your guy to look like Thor or whatever it is, you spend that $10 and then you're playing a store. You're playing the Fortnite game a store. So that kind of concept where you're buying these digital items can be applied to a number of different games, all these different platforms. So Fortnite's just an easy example. Another way that they can make money. It kind of mimics a subscription service. So every 2 months or 3 months or however long it is, the new season comes out, and the new season has all these new digital items. It's the same. So Fortnite is a game where you drop 100 people drop on the map, and it's winner take all. So you try to kill everybody, then you're the number one, right? So the map stays the same, right? But they might tweak a little bit here. Oh, we took away this, we took away the silos and we turned them into an airport, and we're tweaking the game, but it's really the same basic game. All we're doing is dropping in a little bit of extra content, a little bit of these digital items, and it's enticing people to buy the season pass, whether it's $10 or $20, and they're invested in the game. Okay, so you see that business model of the repeat spending through a season pass or a battle pass or a subscription pass, you see it being repeated across multiple different games and across in a lot of ways in a multiple different methods. And so it's not, there are many ways to skin a cat, right? Like there's tons of different ways that you can take this idea that you can generate in-game spending and recurrent spending and apply it to different business models, different companies, different games. Here's an example. So Activision. So the Call of Duty series is a great series. It's been around. First Call of Duty game came out in 2003. So we're approaching 20 years of Activision making money on Call of Duty. Okay. Call of Duty came out with a game called Warzone a little under a year ago, last March. So Warzone, traditionally Call of Duty is a game as a product, right? You spend $50, you got Call of Duty, you're playing the game, and you're playing with your friends. So they introduced this game called Warzone. So Warzone is free. It's just like Fortnite. So I downloaded Warzone the day it came out. It was really exciting. I'm playing Call of Duty for free. I never really played Call of Duty before this year. And then they've still got their $50, $60 Modern Warfare game. Okay. So when you think about, what happened to Activision this year was that they brought so many new people into the Call of Duty fold, like me, never played before. I have an opportunity to play Call of Duty for free. It's an amazing game. I'm having a great time. And then it's like, well, now I'm playing. If I want to really level up in the game and I really want to get the best guns and I want to get the best characters, I'm going to have to buy the Modern Warfare version, which is the $50 version, so I can go grind out my multiplayer games and level up my guns faster. So I bought Modern Warfare for $50 or $60. And literally, Call of Duty made more money this year on they call it their premium version of the game, which is the game as a product, than they ever had in a single year, because they brought in so many new people like me through their free game, and then they put down that extra money. And that's in addition to buying the battle pass that is for the free version. So that is one example. So in Warzone, I'm buying the battle pass every 2 or 3 months for $15, and then I bought the $60 version of the game. And then the new Call of Duty Cold War came out this year. I bought that version of the game. So they're bringing people in because it's free, and then you're getting them to spend money over and over and over through different ways. Take-Two is doing it the opposite way. So Take-Two, their big game is Grand Theft Auto 5. Grand Theft Auto 5 has been around since 2013. Grand Theft Auto 5 is still Take-Two's largest revenue provider and growth provider. So this is a 7-year-old game that is still driving the big business for this company, which is one of the biggest video game publishers in the world. They do the reverse to be, okay. So I get sidetracked when people ask me questions in the middle. So if I want to start spending money on GTA Online and start doing this spend, it's going to be a $50 to $70 initial outlay. So they're doing it in reverse. They're making you buy the game first, and then you're paying down the line. So Activision and Take-Two are taking two completely different approaches to the thing. Activision saying, play for free now, buy later. Take-Two saying, buy now, spend money later. Okay, so they're doing it differently. And I think that just kind of speaks to the fact that this is a new business model, and everybody is kind of trying to figure it out within the context of their own, their own IP and their own game library. So it's just exciting. I love talking about this story. Game as a service games are usually free or cheap. Do you classify Ultimate Team mode that's yeah? Okay, so this question, it says, do you think the sports franchises can continue to survive with this model, or will they have to change it to something like Fortnite? I think that these guys are really trying to figure that out. And just to my example about Take-Two, and then, in a lot of ways, EA, you still have to buy the Madden game, right? You still have to spend that $50 or $60 in Madden or FIFA before you can start spending in the Ultimate Team mode. And the thing that's weird about those games, and there was another question about this too, like Madden gets the reviews keep getting worse and worse and worse from Madden, and they're losing, they're losing their users and on and on. But I guess that my answer to that question is that they're trying to figure it out. And I don't know that they're going to be I don't know that Madden is going to be free and then you're going to be paying online down the road. I think EA is in the process of figuring that out. And I think, the right person to ask that would be somebody in EA business development. But it's a good question. And that's exactly what is going on in this space. So good question. Thank you very much. All right, next slide, Nancy. All right, esports. Everybody wants to talk about esports. Okay, remember 175 billion for global video game revenues? Esports is a $1 billion a year revenue. Okay, so 1 billion for esports, 175 billion for video games. Super, super, super small compared to the broader video game space. But I think what gets people excited is the level of investment and attention from non-endemic brands like Adidas or Mercedes or Red Bull or Tostitos, because the people who are watching esports online are the untouchables, right? The 18 to 34. I never had a TV before. All I do is I'm online. So if these big brands want to get in front of somebody like me who doesn't watch TV, they're going to have to go to where I'm entertaining myself, which is on Twitch. Okay. So, the key takeaway for the esports story is, number one, much smaller revenue pie. And number two is the publishers are in such a good position within the ecosystem because they own the game. Okay. They own the game. It would be as similar to if Spalding makes basketballs, right? So if I wanted to open up a backyard rec league in my backyard and play, basketball, I don't have to pay Spalding like some kind of a service fee or license agreement fee to be able to play my game and bring in neighborhood kids. So they own the game, and they determine the economics of the esports leagues, which they now run. So when you think about where most of the money sloshing around in the esports ecosystem, it's really two areas: sponsorships, which is Adidas wants to sponsor a tournament or wants to sponsor a specific team. It's basically marketing spend, or media rights. So media rights is when YouTube pays Activision $90 million or $130 million to stream, for the exclusive rights to stream the tournaments. So because Activision or Epic Games or whoever it is owns the game and they own the league, they're like in this money-making zone where it's like they own the majority of the profits or the revenues that are on the left side. But I think the key here is that esports, when things are going on esports, there was a tournament 2 years ago over the summer in New York, and a 16-year-old won $3 million. He won, a 16-year-old kid, he won the tournament for Fortnite. He won $3 million. So that $3 million is bigger than what Tiger Woods made in 2019 for winning the Masters tournament. So the esports prize pool is bigger than Tiger Woods' prize pool. So that kind of stuff generates media attention. It's front page news in the Wall Street Journal for the week before, the week of, and the week after. What does that do? I want to play Fortnite. I want to be an esports competitor. This is crazy. Never heard of this. Well, then it goes back to the business model. Well, how do I play Fortnite? I just download it for free, and I can start playing immediately. And then I'm playing. I'm like hanging out with my friends, and then all of a sudden I'm spending money. So it's like this positive feedback loop that happens as the energy of the esports league kind of translates into more players, more revenues, more energy, more players, more revenues, more energy. So it's like this positive feedback loop. So big takeaway for esports is it's a much smaller business. It's dominated by the publishers, and it's really good for the publishers because of all those things I just talked about. All right, let's go to the next question. So I think we've done a pretty good job. Oh, here we go. What are the risks? Here you go. What are the risks? So I'm going to just focus on one, and that's the return to normalcy risk, because that's really the big risk right now. So we saw this play out a couple weeks ago when the vaccine news came out, and basically, the work from home stocks got slammed, right? Zoom was down 20%. Expo was down 4% on Monday and 4% on Tuesday for about a total of 8% drawdown. These are growth stocks, right? And growth stocks, prices and valuations are driven on expectations of future growth. So that when you see the COVID vaccine come out and everybody's like, all right, well, I'm going outside for the first time in 6 months. Video game earnings growths are going to take a hit, and the stock price is going to take a hit too. But go back to those big themes, go back to the idea of in 5 to 10 years, are more people playing video games or less people? I would 100% argue that more people are going to be playing games. It's a part of daily life for people, not just in the United States, but around the world. And that's not going anywhere, COVID or not. And again, go back to 2019, S&P's up 30, Esports up 40. So that's just one of the risks. There's a whole bunch of risks too. Like this is, as is there, in any industry. And I think the key thing here is that, as is with any industry, the companies involved are acutely aware of what the risks are, and they're doing everything they can to mitigate the risks so that they can profit and pass along their value to shareholders. Okay.
JP, as we talk about return to normalcy, can you talk a little bit about esports and the in-person aspect, say at arenas and events and some of that, which has been put on pause, but will return back once?
So esports, so video games had a great year, right? Everything was up because more people playing video games. Esports was a little bit more mixed because the big events, the League of Legends World, which was last year, was in Paris. It was like 50,000 people in a concert, in like a soccer stadium. The Barclays Center in 2018 here in New York. The big events were canceled, right? And some of them were moved to online only, but there was a little bit of a downward revision in esports revenues for 2021 or for 2020. So that in some ways, once the vaccine comes out and those kind of big events can come back into the play, I would expect to see actually an uptick in esports activity as far as revenue is concerned, because those big moneymaker events are going to be back on the table. So it was kind of mixed for esports this year. The NASCAR had this, they did the iRacing in NASCAR, and it was like the biggest televised esports event in history. Like over 1 million people watched it on Fox back in March or April. So it was a mixed year for esports for sure when you compare it, especially to the video game sector as a whole. All righty, next question, or next slide. Good question, Nancy. Okay, so we've gone over the industry, thought about what's going on. It's very exciting. But then it's like, okay, well, how do you invest, right? So we have an ETF, the ESPO ETF, VanEck Vectors Video Gaming and Esports ETF. That is a passive ETF that tracks an index, right? So it's a rules-based passive ETF. And so really the exposure is determined by the rules. So the key rule is the 50% pure play rule. It means to be initially eligible for inclusion, the company has to make over 50% of its revenues from video gaming and esports. So right off the bat, you're excluding all these huge companies like Amazon, Microsoft, Sony, Alphabet, Google, make literally billions of dollars. Those companies put together make billions and billions of dollars from video games and are included in that, industry analysis, but they're not video game companies because as a percentage of the revenue, it's small. Microsoft makes hundreds of millions of dollars per quarter on Xbox and its Game Pass and its, publishing services. But as a percentage of his business, it's like 8%, right? So it's not a video game company. So then you're left with video game companies, pure play. And so then we're saying we're going to cover the top 90% of the universe as determined by the free float, and we're going to cap positions at 8%. So then that's the portfolio. It's rebalanced quarterly. Top holdings are the top publishers and the chip makers like AMD and NVIDIA, which have, extremely large exposure to the video game space through their chips. So that is the index, right? And so what you get is a targeted pure play exposure to an industry, and you're getting exposure to companies that you're not getting in other like broad-based benchmarks, right? If you look at ESPO companies and you compare it to the S&P 500, we're talking about 1.8% or so of the S&P 500 is in ESPO. And you look at ACWI, 2% or so of ACWI is ESPO companies. So low overlap versus the broad market benchmarks, and you get that differentiated return. You have relatively low correlations versus those benchmarks. And even from the sectors these companies are from, which is mostly communication services and IT, even against those sectors, you're getting lower than expected correlation. And it's because of the targeted nature of the exposure, because you're not going to go out there and find another index or, ETF that gives you 8%, Tencent, Activision, NVIDIA, and on and on. It's targeted for a reason. So that's really, it's a thematic play, and thematic ETFs have had a great year this year because more and more people are using thematic ETFs as a way to fine tune their portfolio. And you can do it in different ways, right? You can say, I'm going to put, I'm going to put my ESPO allocation, I'm going to bucket it into my growth sleeve, right? So this is we've had people say, well, this is an alpha generator. This is my growth sleeve. I'm going to, this is a global growth story, right? So this is a piece of my growth portfolio. Or it's a next gen consumer story, right? Like companies like Tencent and C, those guys are hitting China and Southeast Asia like crazy. Like, if you want to participate in the emerging markets consumer story, this is an opportunity for you. So there's all these different ways you can kind of position it. But I think the key takeaway when you look at the portfolio is that it is a global portfolio and it's super targeted. And what's cool is that when you look at like those industry, if you look at like an industry pie chart, where video game revenue is coming from, 30% China, 30% US, 15% Europe, on and on. So you take that industry analysis and then you take the portfolio, the eSpo portfolio, it overlaps almost perfectly, which is really good, right? You want an industry analysis to map exactly your portfolio. And that's what I really like when I look at this portfolio. And I like what I see when I do that. So I think I'm gonna that's pretty much it for the slide. So
yeah, JP, thank you for touching on the use cases. I see questions piling up in the chat box. So what I'm going to do maybe is, when we were prepping with Mark and Megan from CFA Minnesota, we decided we want to spend a couple of minutes on use cases because ostensibly the folks dialed in here are probably practitioners as well. So I should have introduced myself at the beginning, but I was just so excited to get to our speaker. But my name is Nancy Bong. I'm a director at VanEck. I'm responsible for private banks, trust companies, and turnkey asset management platforms. So I've had the pleasure of being joined by JP on a bunch of client meetings and prospective meetings, and I've really bucketed the use cases into 4 areas. And I thought I'd share them with you as we wait for questions to get entered into the chat box. So one is thematic investing. So JP and I met with a bank that had a technology and innovation model, and they decided to use esports, ESPO, as one of their sleeves in that model. And it's also being considered for another bank's global thematic portfolio. So definitely thematic investing is something that we see an interest in when people look at our ESPO ETF. The second is the sports and entertainment divisions of various wealth management firms. These are firms that have divisions dedicated to supporting athletes and entertainers. And so 2 avenues here. Esports athletes are athletes too. Some of them are becoming very wealthy from their winnings and whatnot. So those are target clients, but also a lot of these athletes and entertainers understand the ecosystem and want to have a piece of this secular trend as well. So this is a good way to invest alongside that. The next JP alluded to is next gen. So, it's a great way to open doors if you have a multi-generational family and you want to speak to the next generation regarding themes that they're familiar with and interested in. And another way to show that you're investing their portfolio along their values and what interests them, and so that you're not just putting them in their parent portfolio. So we found this to be a great door opener for millennials, for example. And then lastly, this one is a newer one from this year, but I talked to a chief investment officer at a bank trust. He's actually involved on a personal level in the parks department in his town, and his parks department has created a director of esports role so that children with physical disabilities can participate in esports and video gaming. And so he sees esports as an inclusive activity. And this is important for his firm because his firm actually administers a lot of special needs trusts. So this is a way for them to invest alongside their values and their clients' values as well. So those are a few examples. It's fascinating as JP and I and the rest of our teammates meet with different clients. You find so many different avenues to explore. Very excited to spend this time with you. And I see that there's a few more questions that have popped up. So I'm going to turn the mic over to JP.
Cool. Thanks, Nancy. So let's just run through the questions and then I'm going to finish up with something else. I got my screen share ready, Nancy, so I'm about to steal it from you, but keep it here for now. Okay, so I'm curious how you treat video game reviews and your valuation modeling. So I specifically thinking about EA recently in the Madden 21 release, Madden new reviews got terrible. Long story short is that I am not a sell side stock analyst. I'm not running valuation models trying to figure out, is EA really worth whatever it's priced at right now? I consider myself an industry analyst, and then I take my industry analysis and apply it to portfolio construction. Having said all that, I would go back to my main point, which is that these are growth stocks. Valuations are being driven by expectations of future growth. And so This is a growth, and what's cool is that the PE valuations, PB, they match up really nicely with like a sector agnostic growth strategy. So if you look at MSCI World Growth and you look at the PE for that Morningstar, it really is right in line with this ESPO portfolio. So this is like a sector specific growth story and a growth, and that's reflected in its valuations and a lot of the characteristics like revenue growth for the portfolio on a weighted average and stuff like that. It's a good question. Scott Nelson, good question. What is driving the growth of C Limited and Bilibili? I love C Limited. It was up 175% last year. It's up like 375, 400% this year. It's up like, it's up one of the stocks on my screen. It's up like 10% every other day. It's crazy. Okay. And C is a great story. In our active emerging markets mutual fund, they're also involved, they're also believers in the C story. But so C is, their main bread and butter is Garena Free Fire, right? So it's a game, and 100 million people a day play this game. 100 million people a day. And where are their customers? Like, where are they making their money? They're making their money in Southeast Asia and Brazil. So their revenues are coming from Thailand, Philippines, Indonesia, and Brazil, and Vietnam. Okay. So that goes back to the demographic story, is that there's so many people playing, they're making so much money, everybody's got a phone, and that's what's driving the growth. And then in a lot of ways, C is like a mini Tencent. And Tencent is an investor. I think Tencent owns like 10% of C. They were one of the early investors. And the C story is they're making so much money on video games that they're using that money to create new segments and new verticals. So the two other verticals they have that they're really trying to build out and basically investing and spending money on is digital payments, so like a Venmo, and then e-commerce, so like Shopify or Amazon. So they're doing so well in video games, making so much money, and they're going to take that success and try to widen their net to these other verticals. And the more people they have like in their verticals net, the more money they're going to be making, because it's like an ecosystem play, like it's a platform play. So that's what's driving the growth of C Limited. Bilibili is kind of a similar story, but kind of more targeted towards the streaming services. Bilibili is like a streaming service, like kind of like YouTube. It's like a combination of YouTube and Twitch, but just for China, right? And again, the Chinese video game market is crazy. Everybody plays video game in China. Everybody's in the mobile in China, and Bilibili is just really benefiting from the overall growth of the industry and their position as a market leader in the streaming service and the game market in China. So that would be my answer to what is causing their growth. Let's see here. Is there any hope for GameStop, or everything? So GameStop is like a retailer, right? It's like where you go buy your Xbox. Is there any hope for GameStop, or everything eventually move online with them being shut out? Okay, so GameStop is in our universe, but it's not in our index because it is falls below that 90% bracket. And Michael Burry from the famous Big Short guy, the doctor who shortened the synthetic housing market back in 2008. So he made this huge call. I think it was earlier this year, where he went all in on GameStop because he said it was a good value play. And my answer is that the writing is on the wall for GameStop, right? I don't want to go to GameStop to buy a game. I don't want to, and I don't need to. So then it's like, well, what value does GameStop offer me as a consumer? And it's like, I can buy my Xbox there, I guess. Like, I don't know, like, well, I could buy that online too. Like, so GameStop for me is really trying its best to convert to like an online distributor of these games and titles. And they did have that used game kind of reward system where people bring in their used games and get still credits for it and buy new games. But again, like to me, the writing is on the wall for a physical retail store within a digital entertainment ecosystem, right? They're getting shoved out of the way. And I think you see that reflected in the stock price. And I want to say yesterday they announced a stock offering too, and the stock dropped like 10% after they announced that offering, because they're trying to raise money because they're having a hard time. Okay. Good question here. Could you spend a little bit more about the live streaming market? How is that evolving, particularly in China? New competition from Douyin encroaching on Douyu. Why will new entrants be successful? So when you think about the live streaming market, it's basically two markets, right? You've got it's three or four markets, but basically it's East versus West, right? You've got Twitch dominating the West, and then you've got Huya and Douya and YY dominating the East. Okay. And then you've got like something like Africa TV for South Korea. So there's maybe some minor stuff, but it's really East versus West. And I don't know if, I mean, I don't know enough about the wrinkles of, I think the Chinese market, as a general rule, has to deal with a lot more regulation from the government than the US market does, right? So if I want to launch a website in the United States, I can launch a live streaming website, come up with a cool idea, I'm off and running. China, it's a little bit more complicated than that. The government has a lot more control over what websites people go to and what is allowed, right? So if a new game comes out in China, it needs to be approved by the Chinese government. So I think anything in China is going to be really closely tied to regulatory restrictions, depending on what the government says is and isn't allowed. And that is basically as far as I'll go on that. I don't know if new entrants are going to be able to take over Huya and Duya and YY. So I don't know. That's a good question, though. Compared to traditional sports like football and basketball, esports games change the rules more frequently, have shorter lifetime. Do you see this feature limit the size of the esports segment or growth? As for publishers owning the game, do you think this will limit the number of third-party sponsored competitions and wider spread of the game to more people? Again, this is a great question, and it's very obvious that you know what you're talking about, so I really appreciate this question. So you think about a game like football or soccer or baseball. The rules are the rules. They've been the rules for the last 50 years or 100 years. Everybody knows what the rules of football is. And if they make the tiniest little change in the rule, it's like a huge deal, right? It's like, oh my God, they're changing the game, you know, or the pitcher has to pitch within 30 seconds. Whatever the rule is, the rules are the rules. They're well known. It's not the same in esports. So these publishers, if you think about so if you think about a game like Overwatch League, right? Overwatch League did very well and was one of the first publisher-run leagues that made a big splash. And it was like Activision is in this there, and they have this choice, right? They make more money off of casual gamers, right? So they have this game, and the rules are the rules today, right? So then they want to keep somebody like me who's a casual guy involved. They need to mix it up. They need to change it. They need to tweak it, whether that's tweaking the rules or tweaking the gameplay or whatever. They call that changing the meta. So if you change the game, if this used to work, if this gun used to be good, and then now it's not good, they change the meta. They change the game. So if you're a professional player, you don't want the game to change. You want this gun or this thing, whatever it is, to be the same today, tomorrow, 5 years from now, because that is what, if you're going to practice this, you need to be able to know that you're going to do what you do now that's working is going to work in the next 6 months at your next competition. So the publishers are in this balancing act because they need to keep changing the game to keep casual people interested in spending money. But then for the esports thing, they need to keep the rules the same. So there's a balancing act. And I would kind of liken it to the balancing act that they're trying to figure out between game as a service versus game as a product. They want to keep people interested, keep this recurring revenue model coming in, but they also want to get people to spend $70 on their AAA big games, right? So that is a good question, and I don't know if it's going to limit the size of the esports segment or limit the growth, because I think one of the key features of the video game ecosystem is people like to be fighting it out and duking it out and having competitions, right? That's a part of the video game ecosystem. So the competition part is not going away. But that I think they're trying to figure that out right now, and who knows? I mean, so here's a great example. So like there's like League of Legends, right? There's the team for League of Legends, and they're good or whatever. They're a good team, and they're in the competitions, and they're in the top 5 all the time. They change the game. Okay, the game is same League of Legends, but this character is not as good, and this, if you do this, it doesn't work as well or whatever. So they changed the meta so much that this team that used to be good, now they're not good, and now they can't win. They'll fire the whole team and bring in 5 new guys who know how to play the game, right? So there's this turnover effect, and which makes there's no job stability in the esports competition world. Because if you think about your average 18-year-old, he plays video games 15 hours a day. There's an army of 18-year-olds behind him who will do anything they can to get a spot on that seat. And so it's a super competitive environment. And over the next 5 years, I think one of the things that's getting talked about a lot is the idea of like players unions, like they have in the football, in football, like there's players unions for professional football and baseball, right? The owners can't make you run 100 laps if you don't want to or whatever, right? And I think you're going to see some more institutionalization of the esports ecosystem as the industry grows and as, they need to address some of these kind of problems. And then finally, as for publishers owning the game, do you think it will limit the number of third-party sponsored competitions and wider spread of the games to more people? So definitely third-party sponsor competitions are a huge thing, and that's why it's so important that they own the league, right? The Overwatch League is the Overwatch League. There is no other Overwatch League allowed. The Apex Legends League, the Apex Legends Global Series, ALGS, I think it's called. You can't run an Apex Legends League if I want to start an Apex Legends tournament league where it's like a professional league. I'm not allowed to, because EA owns the league, and they're not going to just let me run one because I want to make money off of their game. So will that limit the number of third-party sponsor competitions? Yes. Will it kind of limit the spread of the game to more people? I don't know. Whether I'm Apex Legends, the EA league or somebody else's league, I don't think it really matters who's running the league, as long as the tournaments are running and the game is front and center for people who are interested. So those are very good questions. You had some good questions before too. So that's it for me on the questions, and very good questions. Definitely the best questions I've gotten from the CFA societies in the last couple I've done. I would expect nothing less from the Minnesota CFA society.
Yeah, JP, this is Mark, and you're absolutely right. I think our folks are probably the smartest among all societies globally. So I will put us up against anybody.
But that does not mean that the returns are better, though. Just because you're CFA does not guarantee better returns. We all know that.
I actually think you just threw down the gauntlet, and you've thrown out a challenge to our group. Prove him wrong, guys. Come on. So did you have something you wanted to share on your screen now really quickly?
Oh, you're on mute, JP.
Yeah.
Yeah, real quickly, I got 30 people online. Appreciate you guys spending the whole hour with me. Hold on. Show all windows. Okay, so we wrote this. Is it sharing? Yeah, so we wrote this great white paper, and it does a really good job of outlining. It's basically that presentation I just gave, just kind of written out, right? So it's the same charts, same basic idea. But I think the value add for this is when we break out all these different business lines that these companies are involved in. So you got developers, console makers, yada, yada. And then we split out the index. So here is what the index is, and here are all the different businesses that our index is participating in. So I'll put this in the chat because it's a great resource for people. It's a really good, you can just forward this around, and it's a great, we put a lot of work into this, and in my opinion, I just sent it to Cam. Hold on a second, everyone. So if you look in the chat right now, take a look at this white paper. It's very forwardable, very digestible, and it does a great job of just going over everything that I just did.
I thought you were going to give us some sort of shopper's guide for Christmas.
Yeah.
Stuff. Yeah.
Shopper's guide. If you can get something, get it, because stuff's selling for 2x on eBay and Amazon from third-party sellers. So,
oh my goodness.
If you have a little kid, get a Switch. If you got a big kid, get him an old Xbox, because the new ones are double the price right now.
All right. Well, all I can say is, if somebody walked up to me and said, "Okay, boomer," right now, it would fit. This was just incredibly amazing. And now I understand why my son never invited me to come play Warcraft with him, especially after it shifted online and he started playing World War. Yeah, this is fascinating stuff. Thank you so much. Any last questions, anybody? Throw them in the chat really quickly while I stall for a little more time. Just a thank you from Scott. JP, Nancy, thank you so much for a fascinating presentation. And I am so glad that you guys reached out to see if we had any nerds, any charter holders that might be interested in this topic. So much appreciated. So,
thanks, guys. I really appreciate it.
Thank you for having us.
Okay.
Happy holidays, everyone.
Same to you guys.